Hello and welcome to Core Finance. I'm joined today by Andrew Prelea, who is President and Executive Director of Romania at Vast Resources. Vast Resources being an AIM-listed stock, listed here in London, and it gives me great pleasure to introduce you onto the show. So,
thank you very much.
Thank you very much for coming in, Andrew. Well, let's start off. There's been lots of news flow this week with regards to Vast Resources and lots of positive news flow. Can we kick off just by giving us an overview of Vast Resources and where you operate?
Certainly. Vast Resources has been listed for about 10 years on AIM. It started out as a junior explorer in southern Africa, mainly in Zimbabwe, a little bit in Zambia. And it has evolved into a production company over the last 2.5 years. So we, as the management team, like to look at it as it's a new start, it's a fresh start as of 2015, which is when we had a change in management and a change in future direction of the company. So, now we're a producing company. We're producing in 2 jurisdictions, which is quite odd for a junior miner, but we're successfully doing so in both jurisdictions, and we hope to grow the company in both Zimbabwe and in Romania as fast as possible.
Fantastic. And you're running a few projects at the moment. Can you just give us a quick summary of those projects?
I'm not so heavily involved in the Zimbabwe assets. That's more our CEO's role. But I can say that we originally acquired the prospecting license, or the license, I'm using Romanian terminology, sorry, the claim back, I think it was in 2007. We finished a pre-feasibility and a DFS in 2012 and declared a JORC of 3.2 million ounces. Now, getting something up of that size and magnitude in a jurisdiction that's quite difficult, being Zimbabwe, politically speaking, it was going to take a lot of investment. We originally sold 50% of the asset to get the production up and running, and that was very successful. We started mining the oxides in 2015 as well. So everything sort of happened in 2015, and we originally targeted 10,000 tonne a month. And with the oxides and the facility that was built, we've managed to hit 20,000 tonnes a month. And now we're in the final phases of getting the sulfides up and running, where the head grades will go from 2.5 to 3 to 4 grams a tonne. And we're hoping to reach the target of a minimum of 35,000 tonnes a month there. So that's all in process. It's all pretty much on target. We were meant to commission at end of September. We're marginally behind, but I wouldn't say we're behind because everything's in place. It's now just the tweaks to get it up and operational.
Super. And you're operating in Romania?
Yes.
Are you on your own in Romania?
No. Well, Vast itself is alone in Romania. We have some management shareholdings, but generally speaking, it's a Vast company. It owns 100% of the Manaila mine and the extension, and 80% of the Baita Plai mine, which should be coming on shortly. And Manaila, we originally bought the mine in July 2015. We bought 50.1%, and earlier this year we bought the other 49.9%. And the reason for doing so was that when we bought the mine, we bought it for a fairly insignificant amount and inherited quite a lot of debt. So we actually ended up buying the rest of the mine for a discounted value on the debt that was there. So it was strategically, it was a very good move for the company. We saw the potential of the business itself. Unfortunately, the way it was originally mined, it was formerly owned by the government, the state.
Understood.
And then it was sold to a Chinese consortium in 2013, and they were basically high-grading the mine, not preparing the open pit, and they were utilising an old flotation plant, an old metallurgical plant, which was 26 kilometres away from the mine. Right. Now, and also then, so basically we're from the top of the mine down to the plant, and then the tailings were going to another place, and then, so effectively 25+% of our production costs are in transportation. Now, when we took over the mine, we always knew that there was an extension possibility. We've finished that prospecting program now. We've drilled almost 2,200 metres. We've given out the results of the first 1,000 metres. The other 1,200 is due shortly. But it's also confirmed the JORC we released back in April 2016 that we believe there's somewhere between 9 and 15 million tonnes with the extension. And when we took over the mine, there was less than 500,000 tonnes left in the open pit. So we've opened up the pit. We've managed to implement a proper, say, stripping ratios now, and we're getting the grade and the quality that we want, and we now believe that we will extend that from a 2-year life of mine to at least 15 to 20-year life of mine. So it's all very, very positive.
Yeah, and improved results and positive news flow coming through. And yesterday's announcement regarding BytoPlay generated a huge amount of buying interest into the stock. Can you explain the importance of this announcement to current shareholders and potential new shareholders?
One of the things that we've prided ourselves on, as far as the company itself, is as a junior you haven't got access to copious amounts of money, and to build a mine from a greenfield or a brownfield generally takes anywhere between 2 and 10 years, depending on the size of the mine. The mines that we've bought, and inexpensively, have got years and years of infrastructure and history behind them. So we know what we're getting into from day one. And Baita Plai is actually very unique. It's all of Mendelev's table exists in this mine. It's been mined since 1947. It was originally a molybdenum mine, and then it became a copper mine, and it's very high in silver. So it's a 6% copper equivalent down there. But what most of our shareholders and investors fail to see is that if you were to try and replace the infrastructure that is there on site today, which is putting 3 shafts down, putting in the haulage, the flotation plant, the railway system, the electricity, and the underground workings, the trains, etc. You're talking a minimum of $60, $70 million just on putting the infrastructure in. Now, with the reserve that's there, which we've got historical data of 1.8 million tonnes approximately, that is without any further exploration in the area. So at 1.8 million tonnes, you wouldn't build that infrastructure.
Yes.
But the infrastructure is there, and with 1.8 million tonne with a copper equivalent of 6%, then you're talking a phenomenally profitable or potentially profitable mine. And the best part about it, sitting in a limestone host. So it's like Aladdin's cave down there. When you go underground, you can see, oh, this is our copper, this is the copper vein, this is the lead and zinc vein. And generally, they've been reporting up to 8,000 grams a tonne of silver in the former lead concentrates. So having all the historical data and having all the information and infrastructure there, it was a very, very, very inexpensive acquisition for the company, and the potential for the business is huge because we've been on care and maintenance now for almost 3 years since acquisition, and we've been preparing. And there's not a high capex cost to get it into production. That's why we strongly believe that within 6 months of the final sign-off of the licence, we'll be completely operational, and we'll probably be in there, as far as we're concerned, and all the indications show that we'll be in there and working underground and preparing by Christmas, if not earlier.
Super. And just keeping our focus on Romania, you've got the Manila development there, and what else can you talk about? And talk about the Zagra licenses. There's a lot of moving parts. There's a lot. But it all seems positive at this point in time. So, what message you want to get across to investors and potential investors with regards to everything going on in Romania?
Well, with Manila, we've proven that we can operate under the most difficult of circumstances. We've turned it into a break-even, and in some months, we're in a profit centre, and we're striving to improve the systems there. The local management on the ground, there's 2,000 years of mining history in Romania, and that coupled with the expats that come in to assist, we're implementing new systems and management systems to increase efficiencies, and that's happening on a daily, weekly, monthly basis. So if we can make Manila profitable the way it is today, once we reduce 25% off the bottom line immediately just by building a new plant, we're going to have a magnificent profit centre there. At the moment, we're milling around 15,000 tonnes a month. The minimum we'll do on the new plant will be at least double that. So that will automatically generate, what we consider to be rather super profits for the business as a whole. Then take into account the Kali Baba extension, where we'll have eventually 3 open pits to access that fresh ore right next door to Manila, and having the plant at the top will amortise the cost of the plant on the transport costs alone in under 2 years. So it's not a huge, once again, not a huge capex item. Construction's very cheap there. You can now buy full metallurgical plants out of virtually anywhere in the world, and have it up and operational in under 18 months. It all depends on building approvals, etc. But that alone as a standalone business, it's a fantastic business, and it's not even reflected in our current market cap. that business alone. So it's which is we find quite entertaining. As far as Zagra is concerned, this was an exploration target from the former state-owned mining companies going back to the 70s, and then they did an intense exploration program from 81 to 89. And they basically said, and you're looking at the commodity prices back in those days when, copper was insignificant. I mean, I was trading copper back in those days, and from memory it was, $1,000 or $1,500 a tonne. Now it's $7,000 a tonne. It's amazing. And they estimated in those days, and these are published documents, that out of the 3 billion tonnes of potential ore there, a minimum of 10%, 300 million tonnes, was economically viable. And that's taking into consideration commodity prices back in 1989. Yes. So we're not going above and beyond that. We're saying we'd be very happy with 10%. That would put us in the top 5 mines in Europe. And with the total amount, with a cut-off grade, even if you go down to 0.25, which most big mines are today, you have the potential of being the largest copper mine in Europe. With infrastructure,
which is great news, and probably, as you rightly say, not reflected in
not
in the
at all
market
reflected,
cap.
not costed into our share price whatsoever. But the interesting thing is that the hardest thing about mining in places like Africa and South America is infrastructure. Now, the one thing that we've benefited from as a company is that electricity is readily available all throughout that entire mineralised zone in the Carpathian Mountains. I mean, the former state company Remin, which is where we started looking at Romania in the first place in 2012, 2013, it's got infrastructure, it's got rail systems, it's got roads, it's got high tension electricity. And no matter where you drill in the ground in Romania, you're going to find water. So all of the things that are generally a problem with mining, such as infrastructure, power and water, are readily available virtually anywhere along those mountain ranges. And it is completely mineralised from the northeast of the country to the southwest, that whole Carpathian belt. So these are things that we want to try and get the message out for people to understand that Romania is actually a tremendous investment destination. It's totally underrated because it's one of the very few countries that still hasn't opened its doors to the rest of the world for investment. But that's coming. The current government is pro-mining, is looking towards implementing the new mining legislation, hopefully in the spring. It was meant to be in the autumn this year, but it looks like it'll get pushed out to the spring. But for us as a junior miner, being the first person on the ground, first mover advantage, it's a huge benefit. It allows us to establish ourselves, to grow the business, to turn into a mid-tier mining company in a very short time with very, very low investment. And then that'll open the doors for the majors to come in and look at some of the bigger assets if we haven't already put our foot on them.
And you mentioned, or we've both mentioned, the valuation, and we've seen over recent days, two very positive research notes coming out that should, or one would hope, boost the valuation. Can you just discuss these notes and your thoughts on them, and do you agree with them?
Well, yes and no. The market cap of the company hasn't been the asset value of the company has never been reflected in our share price, not for many, many years. And I being a former trader myself, I look at it and say, AIM is a wonderful place. It's a great place to make money fast for day traders. But there's also the long-term investor who's looking for potential dividends and multiples on their investment. And if you look at vast market cap today, which I think is sitting somewhere around the 23 million pounds, so let's call it under 30 million, the flash note that came out today from Brown & Hill, they put us at a valuation of $102 million, which is 2.2p, I think, on a net asset value basis. And you compare that to our share price of 0.5 at the moment, that's 4 times just with the current assets that are in play. That's not taking into consideration the two licenses at Zagra, which is Pichoro Zimbru and Magura Negra, which are over 70 square kilometres of mineralised zone, where we're doing the soil sampling and the rock sampling, as we announced last week, and we're progressing on that prospecting program. And not taking into consideration the complete valuation of Manaila and Kalibaba, or by its upside potential. So we're talking about the potential to turn this share into a monster company. So 102 million, I'm very happy with the valuation. I'm not going to complain. The analyst that wrote the paper is very well respected, and he did a lot of research prior to publishing the note. So, yeah, I'm happy with the fact that we've got a note. I'm happy that it's out there. I'm happy that it reflects some true value towards our current assets, which is what their job is. You know, what are you doing right now? Forget about the future.
Yep.
But if take into consideration what we've got in pipeline and where we're heading, you know, in the direction of the company, I'm looking forward to a very, very bright future for Vast Resources.
Fantastic. And you mentioned the future. Where do you see Vast Resources in, well, let's say 6 to 12 months and even further up, 12 to 18 months? There's been a lot of positive news flow already, and we've already touched on that. Where do you see the future for Vast?
Well, I mean, the implementation of the new metallurgical complex up at Kali Baba will probably be the major player, because that will generate instant cash for the company. You know, since we started talking about, you know, expansion of the company, the market's been very sceptical of how you're going to fund it, which is
Exactly.
normal. Finance is always the you know, the funny thing is with our share, it's either the speculation on, you know, are you going to get your license? Then when it comes close or you get a license, it's, well, now how are you going to fund it? So you get these spikes and peaks and troughs in the market. Well, we've strategically planned. Originally, at the beginning of the year, when we first were buying the other 49.9% of Manaila, we were looking at bringing in a partner that was going to fund through the expansion of Manaila and Kali Baba, and then look at the prospecting for the future on the Zagra licenses. Time has been our friend. For all sorts of reasons, things got delayed because we had historic debt providers that had first right of refusal. So that sort of delayed the process of selling part of the assets. But since then, commodity prices have moved up, production has improved at Manaila, and now we're looking at alternative sources of funding. And logically speaking, for the shareholders, the best beneficial financing source for the shareholders to avoid dilution is, of course, to obtain debt. I have to say, I'm pleasantly surprised that literally in the last 8 to 10 weeks, when we've talked about, you know, expanding the Romanian assets and the improvement of quality in the assets, we've been approached by some of the largest companies in the world for offtake agreements. We've got an existing offtake agreement. It expires at the end of the year. The bidding process normally starts around October during LME week. And on the lead up to that, we are constantly looking at the best solutions for our shareholders for financing it. So we're extremely confident that we will end up closing an offtake agreement in the coming weeks or months that will take us to the next stage, which will provide us access to funds for all future growth of the company. And the reason why it's taking a little bit longer than one would expect is that everybody has to do their due diligence. People just don't sit there and write checks for copious amounts of money without finding out, you know, what are they going to get in return and how are you going to pay it back. So we're on the right path. The business is growing. We're heading in the right direction. Commodity prices have been our friend in the last quarter of this year. We believe that with the demand for copper growing globally, that we're going to end up, you know, targeting more and more copper assets and zinc assets in Romania, and there's plenty there to attack. And with the right partnership, strategic partner on board, we'll be able to consume them.
Fantastic. Well, sounds like hopefully a very bright future, even brighter than it has been over recent weeks. Andrew, thank you so much for joining us today.
Thank you very much for having me. Greatly appreciate it.